All right, guys, go to my YouTube channel at the Murchison Method, like and subscribe. I am putting out free content every single day. This definitely can help you in your real estate business. Today, I am going to go over hard money loans and what the advantages and disadvantages of using these loans. This is a great tool for all real estate investors, but especially for someone that's just starting out, because they're really the only ones that are going to give you a chance when you're first starting off and you don't have any experience. Your credit might not be as good. They will still give you a loan on a property. I wouldn't be where I'm at if there wasn't for any hard money lenders out there that gave me a chance when I first started. Now, today, like I said, I'm going to go over the advantages and disadvantages. Now, the advantages, the first advantage and the most popular one is that the speed and flexibility of closing. Hard money loans, you can close very fast. You can find a property today and you can close in a few days. It's great tool if, for instances where you have a property that may be going in foreclosure. You can use a hard money lender that can save you or save your property from going in foreclosure. Let's say you have a seller that the only way you're going to get that deal is if you can close fast. That's when a hard money lender will come into play, and it'll be a great resource for you to use, is the speed and also have flexible terms on structuring the deal. The second one is that less credit requirements. Okay, you do not have to have good credit in order to get a hard money loan. You got to understand, these hard money lenders, they are solely loaning on the property. Okay, they are going to do an appraisal and they are going to loan you a certain percentage to the value. So if you default, they know that their money is safe because they are only loaning you a certain percentage of the value of that property. So, and they can sell the property very fast to recoup their money back if you default. So you do not have to have perfect credit. You don't have to have experience. It's less credit requirements on getting this loan. The third is useful for specific strategies. Okay. All right. So like, what do I mean by that? These loans are good for flippers, for people that flip houses, because not only can you close very fast when you find a house that you need to flip, these lenders will also give you the money to fix it up, okay? So you don't have to come out your pocket to fix up the property. That's a great thing, great resource to use when you're flipping houses, okay? Now, the last advantage is you're building a relationship. The more loans you take with a hard money lender, the better terms you're going to get, the more properties and different situations they're going to loan you on. They may even, it's a great resource to have, to have in your for future deals if they come up. You're building a relationship with the company, and there are many hard money lenders that know each other, and you can basically set yourself up to have unlimited financing for all your deals, by building and doing good business with these hard money lenders. Now, of course, there are some disadvantages. Like the first one, disadvantages. All right. First one is it is higher interest rate. They have high interest rates. Okay. The average rates are between 10 to 12%, which is of course higher than interest only. Sometimes it goes up to 15%. It all depends on what the hard money lender. This is higher than, of course, a regular conventional loan, but you got to understand this. You're only using this loan for a short period of time. It is a higher risk loan for the lender, so that's why they charge you a high interest rate. Instead of putting that money in the bank, getting low interest rates, they rather loan it on property and get a higher return on their money. The second one is that it's a shorter term. It's a shorter loan term. These hard money loans are usually between 6 to a year. And then it has to be paid off either by selling the property, or you can refinance the property and pay that loan off, okay? That's why I said this is the key here, relationship building, because by you building that relationship and building rapport with those hard money lenders, they can be flexible with this term. They may even give you a longer term because they know that you do good business and you're eventually going to pay them off. Now, the third one is that they do have higher fees as well. All right. They usually charge about 5 points on average on the loan, higher than, of course, a conventional loan. You got to understand the reason why they do this is because the loan is more risky for them, and the default rate is a little bit higher for them because of the type of loan it is. All right. And that leads to the last con, which is it has less regulations. Okay. And the risk of default for you, because they're only giving you a short term. So if 6 months come up and the property's not done flipping and you have to pay them off, what are you going to do? That gives you risk to default on that loan, and they can definitely take the property, sell it, get their money back and things like that. And it's less regulations with hard money lenders. It's not like a conventional or regular bank. These are private individuals or private companies that are lending you the money. So it's not really regulations. It's really not that strong like how it is with these other conventional banks. So overall, hard money loans is a great resource for your business. I still use hard money lenders to this day, especially if I want to close fast on a property, because I know how to use them now and how to use them to my advantage, by being in business for so long. But in my opinion, it is a great resource for any real estate investor, new or seasoned, to have in your arsenal, especially if you want to grow and continue to grow the business of buying and flipping and buying properties.